Good evening, everyone. Thank you for joining me on Legacy Live Wednesdays. This is Sebastian Boyer, the approved guy. And on tonight's presentation, we're going to be talking about saving money on taxes. I have a special guest that we're going to be interviewing, Elena Anthony. And she is a not just a CPA, but she's a tax strategist who has very unique and very powerful ways of helping business owners, entrepreneurs, and W-2 income earners save money on taxes. So we're going to get right into a brief presentation, and then we're going to move forward into an interview with Elena. So without further ado, make sure you also include, if you're visiting during the live, say hi, put your questions in the chat. If you're watching this on the replay, please comment and we'll come back and answer your questions. You'll always also have the opportunity to reach out and schedule if you'd like on a one-on-one. All right, so without further ado, we're going to go right into the presentation, and then we're going to proceed with the interview with Elena. All right. So again, this evening's presentation is based on saving money on taxes. And so as always, we have a Bible verse that we use to kind of base this conversation off of. And that Bible verse is Matthew chapter 22, verse 21, that says, "They said to him, Caesar's, and he said to them, Render therefore to Caesar the things that are Caesar's, and to God the things that are God's." So a little bit of backstory here. The red letters that you see there are Jesus talking. And what was going on is he was in the temple courts, in the courtyard of the temple. There was a lot of people there, a lot of traffic, and the Pharisees were trying to catch him off guard, and they were basically trying to get him to trip up. So they decided they were going to ask him a trick question, which was, who should you pay taxes to? Now, if you were a Jew at that time and you were paying taxes, it was you're paying taxes to Caesar. It was something that the Jewish people at that time saw as not only a hardship, but felt like it was illegal because they felt like they were being illegally occupied. And so therefore they didn't want to, and some of the more radical Jews at the time literally wanted to go to war and kick Rome out of their town, out of their kingdom. So if Jesus said, well, no, don't pay taxes to Rome, to Caesar, then what would happen is he would get himself in trouble with the Romans, and he would then get arrested because he would be defying the Romans. But if he said, pay taxes to Caesar, then he would be basically denying his Jewish people and their beliefs. And so it was a trick question to catch him one way or the other. He was either going to break the Roman law or he was going to break the Jewish law. But Jesus, being as smart and as savvy and as intuitive as he is, he said to them, render therefore. He asked them he asked for a coin, and they gave him a coin, and he asked, well, whose face is on this coin? And they told him, well, it's Caesar's. That's why it says they said to him, Caesar's. So Caesar's face was on the coin. And so Jesus said to them, well, then render therefore to Caesar the things that are Caesar's, and to God the things that are God's. And so they just were like, oh my gosh, he anticipated it, and he answered in a way which solved for both sides. So what that means is, folks, whatever your belief systems are, whatever kingdom you're living in, the country we live in is the United States of America, and Caesar is the IRS, and we have to pay up. We all have to pay up, right? So now that also means that we have to know the rules and the laws, and as long as we play within those rules and within those laws, we can minimize how much we're paying, right? As long as we remain legal. So there's a difference between a tax preparer and a tax strategist. And that's why we have Elena with us tonight, who you'll be meeting here in just a moment. Because, see, most tax preparers, such as your typical bookkeeper or CPA, what they're doing is they're looking backward. What did you do? And then they're filing that, reporting that, and then whatever standard deductions there are, they're filing that. Where a tax strategist looks forward, which means you have to start working with a tax strategist way in advance before you're filing taxes, because you have to plan and put systems in place to be able to take advantage of these strategies. So, a tax strategist, for both business owners and employees, the right strategist turns taxes from a liability into an engine for wealth building and legacy creation. And so, therefore, they're going to help you to save money on taxes. So, this is actually going to be the fourth pillar of the legacy generation system, which is tax flow engineering, keeping more of what you make. So the in the legacy generation system, what this pillar is teaching you is how to master how to legally minimize tax exposure and reroute dollars back into your system. Tax flow engineering is about intentionally designing the path that your money travels so you pay only what the law requires and nothing more, while redirecting saved dollars back into wealth building vehicles that you control instead of letting taxes drain away your capacity to grow. You engineer your financial structure so those dollars become fuel for your legacy. The core philosophy of tax planning or tax strategy is taxes are your largest lifetime expense. Think about it. It's the biggest expense that we have. And yet, most of us spend more time and more energy into shopping for discounts than into reducing our tax bill. Tax flow engineering recognizes that cash flow isn't just about income, it's about how much you keep. The goal is not avoiding taxes, which is illegal, but strategic positioning within the rules to control the flow of money between earning, saving, investing, and spending. So check out legacygenerationsystem.com. You can scan the QR code. I'm going to leave it there for just a moment. And we're about to go ahead and transition so that you're going to get to meet Elena now. And we're going to get into the interview. So let's go ahead and bring Elena on now. All right, here we are. Good evening, Elena, and welcome to the show.
Good evening. Thank you. Thanks for having me.
Well, thanks for coming back. And last time you were here, you dropped such great jewels and value that definitely had to have you back, and you'll be back again. But tonight, first, what did you think about the presentation so far? Did I
I
hit on
think it
some good
was so
points?
good.
Yeah.
I was so glad that you pulled that Bible verse because that's one of those Bible verses that like people don't talk about a lot, but I remember when I first read it for the first time and when I mean read it for the first time, like not hear it in church, but literally like read on my own. And I was so impressed with the way Jesus handled that question because I know, like you said, people expected him to just say, like, oh, you're a Jew, so you're going to also say, like, don't pay Caesar because he's not one of our people. But Jesus was smart enough to know how to handle that situation. And again, you pay Caesar what Caesar's due, and you give God what God is due. And
Amen.
truthfully, if you follow that, everything is going to work out in your favor.
Amen to that. Well, thank you for seconding me in that Bible verse, because without that this purpose and the mission that we have here is to really use the kingdom as a point of reference to help us be better stewards of our wealth and of our
Yeah.
plans, and just let God lead us in our life and in our businesses. Um, so I have a bunch of questions for you, and so I'm just going to get right into it.
All
The
right.
first question that I have for you, well, you know what, before we do that, why don't you tell everybody really quickly just a little bit about yourself, your company, and what you do, and then we'll get into the questions.
All right. Well, my name's Elena Anthony. I am a tax strategist and CPA, and I own Amplify Accounting and Consulting. What we do there is we mainly do tax planning. So we strategically plan to help you minimize your tax liability for the year, but we also do tax preparation and accounting services and a little bit of business consultation. But taxes are my thing. I like to tell people when I first started working, I realized I had to pay taxes. That was my trigger to really figure out like how taxes work and how can I pay as little as possible. So I've been doing this thing for a long time. So just know that I'm a little bit of a nerd where I'm going to find out how to make taxes work for me. So if I can find out how to make it work for me, I'm also in the process going to find out how to make it work for you.
Awesome. Thank you, Elena. All right. So the first question I have for you this evening, and this is we're going to break this up into two segments. This first segment is going to be for business owners. Second segment will be for W-2 income earners. So for you
Okay.
business owners out there, the question is, what's the biggest mistake that you see, Elena, that small business owners make when it comes to taxes and setting up their business entity?
So a lot of times, especially like since TikTok came out, what I've been seeing lately is a lot of people just automatically go to an S corp for their entity. And the thing about an S corp is that yes, it can help you save money on taxes, but depending on where you are, that may not be the best option for you at the beginning because there's a lot of administrative fees that go along with having an S corp. You're supposed to have payroll, so that means you should be bringing in enough money to pay yourself payroll and anyone on your team, but then also you should have a board and you have to make sure you have all your paperwork in order. And typically, the administrative costs are pretty high on an S corp, so you have to keep that in mind. Whereas an LLC, you don't have to have that in place immediately. Now, granted, yes, you do pay more taxes with an LLC. And that's just more so from the standpoint that with an LLC, you have to pay your self-employment taxes. Whereas with the S corp, the business pays one half, just like working for a company, and then you pay one half. And so a lot of people just go straight into the S corp, but then they are not in the place to actually pay those fees, pay their self payroll. And so they need to know that initially you can go into LLC, and then once you make a certain level of profit on a consistent basis, then you can change your tax strategy to an S corp. So you could be an LLC tax as an S corp instead of just going straight into it.
So you start off as an LLC taxed as an S corp. So that doesn't that give you the same some of the same tax advantages as the S corp without the
Yep.
high administrative costs and requirements as the S corp.
Exactly. And especially too, if you don't plan to grow your business as big, that might be the better option for you. So I'm not saying that like everyone should be an S corp or everyone should be an LLC, but you definitely should look into the different options and make sure that you actually consult with someone about it. Please consult with a lawyer, consult with an accountant about like what that looks like from a tax perspective, and then make your decision. Don't just like go off of a 60-second TikTok.
Yeah. Please don't go off a 60-second TikTok. Okay. Next question. How can a business owner legally reduce their tax liability without triggering red flags from the IRS?
So I would say, I know this is it's not going to sound like what people expect me to say, but I'm going to say documentation, 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 documentation. So you still may set off some red flags here and there, but truly, if you are documenting everything you're doing, then you should have some decent numbers. I think a lot of times they set off red flags, or business owners set off red flags because like they'll have something that's like, well, they don't have good records. That's what I'm going to say. They don't have good records. So you'll see like a business owner have like their write-offs and they are absolutely like round numbers. That is not realistic. You're not going to have round numbers for your write-offs. So make sure that you are having lots of documentation, and even with the strategies that you can take to help minimize your taxes, all of them require documentation. Like if you hiring your kids, you need to track how much they're working, what exactly they're doing as a job. You need to have a job description for them. And then you also need to track how much you are paying them, because you cannot pay them more than the standard deduction, which for 2025 is 15,750. And since I mentioned hiring your kids, just make sure like whatever job you have for your kids, it makes sense for their age, because that's really the issue. Like if you don't have good proof, then it's not going to be in your best interest.
All right. Um, when should an entrepreneur consider forming an S corp? We talked about it, but if they start off with an LLC, when should they, like, at what stage is it like, okay, now it's time to make that change? Is there kind of like a tipping point?
Yeah, I would say like if they're consistently making somewhere between like, I would say somewhere truthfully between like 75,000 and 90. I know a lot of people say 50,000, but the reason why I question 50,000, I think it really depends on the business that person is running. Because if you have like employees, because if you are making 50,000 in a net profit consistently, to run payroll, that's an expense, right? And so I want it to be a situation that when that business owner switches to an S corp, like they're still bringing home some type of profit. And sometimes if you have payroll is not cheap. I mean, there's some great payroll companies out there, but once you pay the taxes and everything, you may walk away with no profit. And the goal is to make profit. Like
Right.
the goal of business is to make profit so you can use it to build wealth. And so we want to make sure you're in a good place. So I'll say somewhere between 75,000 and 90,000 net profit on a consistent basis.
All right. Very good. What are some overlooked deductions business owners miss out on every year?
So I would say the main one is if you work from home, like you have a dedicated home office, a lot of times business owners do not um don't include that. Like even if they are working with an accountant or a tax preparer, when they fill out their organizer or speak to them, they don't even bring it up, because that's a question I tend to ask my clients because they don't bring it up to me. And so then I'm asking you, like, do you have a dedicated home office? I would say they also forget about like travel expenses, especially if they have a position where they're going back and forth, or even some of our like 1099 freelancers out there. A lot of times they'll have a piece of like their mileage, but not all of it. And then also, even if you choose to do mileage, I do think like if you drive a lot in the type of business you have, making sure that you're also keeping track of expenses that you're paying on that business. I mean, on the business, on that vehicle, because it may be more to do the actual expenses. Now, granted, once you pick an option, mileage or actuals, you have to stick to it. But that's something you should really think about. And then also like assets. Like if you have assets in the business that you did not expense in that year, like those assets can be depreciated. And depreciating those assets can really help you out when it at tax time. So you want to make sure that you keep track of the assets in your business. I would say like if it's something that's maybe over $1,000, like you didn't expense it, or some people choose 2,000. It depends on the type of business you have, because if you have a business that has higher expenses or higher items that you purchase, you may want to raise that minimum that you're going to say, okay, we're going to expense it. Whereas, okay, is this an asset we want to actually depreciate? So I'll just give an example. I have a client who has a multifamily, and they are using it for like nurse rentals, like short term travel nursing rentals. And so for them, some of the items they buy for that, it's a three family, so it's furnished. So some of the items, those are just completely like just expense it out. But some of the more expensive items, like they added laundry and things like that, those items are higher cost for them. So those items we're going to depreciate over time.
Understand. Okay, so depreciating business assets, and documentation, very important,
Yes.
right? All right. How important is it for business owners to separate personal and business finances, and what's the risk if they don't?
Ooh, this is one that even for I think every business owner struggles with this. I talk about this all the time. So it's important to separate just in general. Like I'll give you the easy one first. Just in general, it's important to separate so that you as a business owner can determine like truly how much money you're making in your business and you can see it versus like what is going on at home, because a lot of times when you're a small business owner you tend to mix them and then you can't make good decisions. But then when we look at it from a tax standpoint, it's going to be hard if for some reason you're questioned about a deduction you take or that you took to verify like this is truly a business expense versus a personal. If everything is mixed together, the IRS is going to look at you like, are you sure? Like, because you're running this through your personal account. And from a legal standpoint, if you were sued in any type of way, even if you are not saying, well, I wouldn't say that because I'm not a judge. But what I will say is, even if a judge sees that your assets are commingled, like your business with your personal, and you are being sued, that judge can lift that veil, that corporate veil, which means that that person suing you can literally come after your personal assets. And that's not the type of risk you want to take on. So I would say, even if you're a business owner and say you don't have, like, you're just starting out, maybe you don't have your LLC yet, or you haven't decided what you want to do, still set up a completely separate checking and savings for your business. It will really help you out just from the legal standpoint, from the tax standpoint, with all your business expenses, and from like the business, running your business and making sure you're making important decisions.
That's good stuff. I never thought about the fact that if you were commingling, and potentially you were in a lawsuit, that a judge potentially could you know require, basically remove that corporate veil and the protection because of that commingling. That's a very strong point to make for people that are really looking to protect their assets in their business activity. And if you're out there and you're commingling, then you're literally putting your assets at risk. So definitely take heed to that. That's a really good point. All right, that's good stuff. Um, all right, tell me. Let's see. Can you explain how hiring family members? You mentioned it a little bit
Hmm.
before, but can you explain in more detail how hiring family members or children can be a legitimate tax strategy?
Oh yeah, that can be amazing tax strategy. First of all, hiring your kids or even a family member, that's a write off to the business. So the amount that you pay that family member, you can actually write that off and it actually stays within the family. But even if it is like your child and your child is below the age of 17, like I mentioned earlier, you can actually pay them based on their skill level to do work in the business. And if it's under that standard deduction, you're able to write it off yourself, but then your child doesn't have to pay taxes on that income.
Wait.
And
So it's a
that
tax deduction to the business, and because it's under a certain amount, it's not taxable income to the
exactly.
child. Amazing. All right, go ahead.
Exactly. Yeah, so that really, if you think about it, a lot of some people choose to like pay out their child and like keep it into like a separate account for the child because it has to go directly to the child's
Mhm.
account. So typically, as a parent, you would have a bank account with both your names on it, right? A custodial account for that child. But you can use that funds. If you really think about it, that could really help you out, because if you think about how many parents right now are paying for like extracurriculars, you can use it for that. You can use a portion to save for college. I've seen parents put money into a Roth IRA for a child from work, from income that they receive from working in a business. So there are so many ways that you can basically take that money from your business, get a deduction, and then also be able to use those funds to help advance like any goals that that child has or any goals that you have for that child. And so it's a great option. You can also, if they're old enough and it makes sense, you can put them on your board also. You didn't ask that, but that is a tip, especially if you have like an S corp. You can actually put that child on your board and include them in your board meetings. And especially if your legacy is to pass your business down, that may be something to get your child, you know, more involved and more interested in the business. Because I
Yeah.
do know, like, these days, most of the kids, they don't want to do what your parents are doing,
Right.
but it may gain some interest from your kid.
Yeah, yeah, no, because they're engaging and participating in the process. So it's not like they're looking on for they're not experiencing it from the outside, but from the inside. So there may be a
Right.
different experience that they may grab onto it. That's good stuff. One thing I will say, one of the uh, things I would advise and recommend my clients to do with the legacy generation system would be to use those dollars that would go to that payroll for the kids to set up their wealth reserve account, their wealth reserve contract, which is a high cash value whole life insurance policy that can be used for tax savings. It could be used for college planning. It could be used for you know starting their first business, paying for their wedding. That's one of the recommendations I would have because besides some of the other conventional methods, just because of the flexibility and the tax free
Hmm.
growth inside
Oh, I agree.
of the policy.
Oh,
But
yeah.
that'd be a great way to fund that policy with a tax deduction from the business and not having to pay the income tax. What's the amount that you said? What's the maximum?
15,750.
And that's for 2025.
Right.
Yeah.
So, of course, it'll change next year because they change the standard deduction every year. But just keep on top of what it is. I'm sure. I'm trying to think. Did they release it? Did I miss it? I don't think it's released yet. If no, it is released already because it was released back in September. I can't remember what next year is going to be, but just stay on top of it.
Okay.
And every year you can go up to that amount for your children.
Okay, cool. Thank you. All right. Okay, so number 7. How does having a business vehicle, home office, or travel expenses properly structured impact taxes?
Oh, a whole lot. So a business vehicle, as I mentioned earlier, I talked about like the mileage and the expenses, but the depreciation alone is helpful for you, especially if you're a type of. I always go to. I have a client who's in construction, and I know they have a particular vehicle for their construction jobs. Like that vehicle, they're able to depreciate it over a 5-year period. So that is a big, for them, that's a big deduction. In addition to, they're able to take the mileage on that vehicle every year. They choose not to do the actuals because the first year the actuals didn't work out, but in their case they're construction, so they're always driving to a site. But depending on what you're doing, even like, as if we talk about you, if you're a life insurance agent who meets with your clients, like actually drives to them, that's something that you can use that mileage to write that off. Also, with the home office deduction, so there's two ways you can do it. You can do a simple deduction. Basically, the max is about 300 square feet of your home space, but basically you are taking that dedicated home office and just taking your square footage of your office and dividing that by your actual whole home cost, and then using that to compute your deduction. But you also can do actuals if you choose to, especially for people who may have like a I'm gonna go. Sorry, I'm going back to Real Housewives of County. I think her name was Vicky Gumbelson, but she had like an office, but she had like a big office space in her home at one point. And so, if you have like a big space like that, I would say like use your actuals. Like you could use a percentage of your expenses for the home to, and based off of the size of that office, to deduct your home office expenses. So it just depends on the type of office you have. A lot of times, if you've ever done your own taxes or paid attention, people who have like in-home daycares, that's like a big one for them because they're using such a significant space to run their daycare. So you have those two options that can really help you out. And then what was the third one that you mentioned?
Travel expenses.
Travel expenses. So travel is such a big one because you can go to conferences, you can go to different states. Even if you, I think one thing people don't realize, even if, say, you are going on a business um, trip and you even combine it with some type of business, then you're still able to write off like a portion of that. And so, it's important to keep track of all of that. It's also important. This is where using your business account comes into play also when you do travel, because a lot of people forget, if they travel for business, they use their personal, they forget to go back and get those deductions so that they're able to write off those expenses because they don't pay attention to it. I'll also say for like the different people who do like real estate investing that's not in their city, or even if you do like maybe like some type of equipment leasing or something like that, you're able to write off when you're going to visit that particular, either the equipment or the property, and you go to check it out, you're able to write off your travel costs there also. So it's not dollar for dollar, but it
Hmm.
is something, and it's something that you definitely should keep track of so that you are able to write it off when it's all said and done. A lot of times people forget. Like I even have clients where I have to say, like, I know you went here because we talked about it. I don't have an expense for that. And they're like, oh yeah. Oh, I did this retreat or I did this conference. So make
Do
sure
you
you keep track of all your expenses.
now in that process? Do you recommend for us to keep actual hard receipts, paper receipts?
I say you can actually either, I like some type of receipt app, but if you don't want to do an app, I say just take a picture of it and like put it in a folder in the cloud, because these days receipts actually fade. And so it may not work out in your favor when it's time, but just keep it like in a folder in the cloud, or like if you booked flights or hotel room stays, even like the confirmation if it was a conference or something, set up a folder in your email where you have your receipts so you know where to go to get that information when it's time.
Is there any information that needs to be added to the receipt besides just a picture of the receipt?
I always put a note, so I always kind of have like a notation saying what I actually did, just for, because we all get busy. Really and truthfully, like if there's a lot happening in your life at the moment, we know that life can change in an instant. You want to have some type of notation. So normally I just say something attached to it, like last year I did a business trip to Nashville, so I said the name of the conference and I put Nashville. So everything I saw that said Nashville around that time, I knew it went with that particular trip.
Okay, awesome. All right, last question for business owners is, what does tax planning really look like throughout the year, not just during tax season for entrepreneurs?
So I love that you asked this question, because a lot of times people don't realize that you have to be proactive about tax planning, not reactive. So during the year, what it would truly look like is that you're meeting with your tax strategist. If you are a huge business, I would say maybe monthly or every other month. But for the most part, let's say a quarterly meeting with your tax strategist, you all are going over what your tax liability looks like at that time, and then what strategies that you need to implement during that time to make sure that you're minimizing your taxes. Now, every single quarter or every single month, like, you're going through this and we're seeing where you fall. So I if I'm meeting with you, I'm going to see where you are at this time, and what changes we need to make when it comes to your strategies. Sometimes, like, if a client is maybe having a little bit of a slower year, maybe you're still implementing, but you're still making sure, like, okay, this is where it looks like you're going to fall. I like to also make sure that I have an understanding of, like, the cadence of their business and where they're at. Because for some businesses, like, the beginning of the year is extremely slow, right? Especially coming off the holidays. Everyone has, I always joke around and say everyone's trying to catch back up from spending all of their money. And so a lot of times you'll see certain businesses, especially businesses where it's a lot of discretionary spending, is slow at the beginning of the year, but you will see them start to ramp up once it starts to get warmer. So during that time, you want to make sure that, okay, how much money do you have? How much money do it looks like you're going to pay? Also, your strategist should really be trying to help you reach your goals. So it's like, where do we look like? Where are we at where it comes to this goal? Do we feel like you're going to need more money? Does it look like we need to maybe invest in your business a little bit more? Maybe you need to pull some money out of your business because you have this other wealth goal that you're working towards. Or maybe it's time, truthfully, I also tell my clients when they should take a vacation, because there are some clients that are going to work the whole time. But the reason why we're going through this is to make sure that at the end of the year, no matter what, that you're in a good place. You have minimized your tax strategies, minimize your tax liability using tax strategies, so that you are not surprised when you file taxes the next year.
Very good. Excellent. All right. So now let's talk about W-2 income earners. So can they benefit from tax strategy? Um,
They can.
they can. So
They can.
tell me, if someone only earns W-2 income, are there still real strategies to lower their tax liabilities
So there
legally?
are. Yeah, yes, they're legally. Well, we do everything legally here. I'm not going to jail for anybody.
Me neither.
so, so there are things. I would say this. So if you're a higher income W2 earner, you definitely, there's a lot more things you can do than a lower income W2 earner. What I would say is that for the higher W2 earners, like, there are some of the things I'm gonna mention for the lower ones apply to them, but also you will have to make some type of investment, because there's a lot of different investments out there that'll help you earn money, but it'll also help you reduce your taxes. And a lot of people don't realize that sometimes you need to invest to be able to create that deduction in taxes. So there are things. Now, I would say that is for W2 earners who are somewhere in the $300,000 to $400,000 W2 or more. Now, for anyone who is less, of course, there are things like you can contribute to your 401k. Now, with doing that, there is literally, that's the only dollar for dollar deduction out there. So basically, it lowers your taxable income dollar for dollar. You will have to consider, though, if you want all that pre-tax income in your retirement and how that is going to affect you. Now, for some people, because you may be in the same tax bracket for for the rest of your life, it may not be a big deal. But for I always think about the millionaire teachers, like the teachers that taught their whole career and then they actually save the whole time and they end up having like a retirement account with $1 million plus. That's something you would want to consider and look into. over time, like when is the right time? Maybe I should start converting some of this money into after tax money. And then what can I do to offset the taxes when I do it? Another thing you can do, which is my absolute favorite, is if you have a high deductible medical plan, you can contribute to a health savings account. And the health savings account, like the is you put your money in pre-tax, so no taxes on that. They grow tax free, and then when you withdraw it, it's tax free.
Hmm.
And so a lot of, well, the people who know about it and they have the ability to contribute to it, a lot of them are using that as a way to reduce their taxes and contribute to like having more money when it comes to retirement, or if they plan to maybe retire early. So that's an option. And then also you have your different flexible spending accounts. There's one for, of course, just medical, but you do have to spend that money within a year, whereas for the health savings account you can always roll that money over. You have the dependent care account where you're having money withheld pre-tax, so it's lowering your taxable income, and you're paying for childcare. So if you have a child who's in school, but they do after school, or they have daycare, or they have summer camps, that might be an option for you.
Hmm.
So that's tax. That money is contributed tax free, and then you're able to take that money out of that account to pay for those expenses. And then even for some, if you're in a larger city, they have commuter benefits, and that is also taken out pre-tax, so it lowers your taxable income, and you use that money to pay for any of your commuting back and forth.
Okay. This just came to my mind. I think we touch on it maybe on number five, but how about if you have a special needs child? Are there tax advantages for kids
Yes.
in that situation?
Yes, the ABLE plan.
Hmm.
Yes, they have the ABLE plan that you can contribute to for a special needs child. And for that plan, what's the good thing about it is you can set that plan where it should be able to, you can contribute to it continuously and help that child out for life. Because typically, when it comes to um, children who are disabled, a lot of them, they may not ever be able to live on their own, and so you can set it up where you're preparing your child to, you're giving funds tax free, well, depending on where you, so you can contribute to it and get a tax deduction for contributing to it, but that plan is growing. And then also, like, your child will be taken care of, like, no matter if they're adult, and you can set up for care for them even if you're not around. And also, I would say with some of the money that you're saving on taxes by contributing to these plans, especially when I'm thinking about a disabled child, bringing up what you were saying about the wealth reserve account and setting that up also, so that you can be in a better position, especially if you have a disabled child.
Yeah, amazing. All right. What is the biggest misconception W-2 employees have about their tax withholdings?
That a refund's a good thing.
So speak to that really quickly.
A refund is not a good thing. I'm sorry. When you get a refund from the IRS, especially if you don't receive any of the refundable deductions and credit, so things like earned income credit, where no matter, like, even if you eliminate your tax liability, you still get money back. You should have set your taxes up so you could have received your money all year. And I know a lot of people think that, like, oh, well, this is kind of like my savings, but you could have set up to have that money automatically gone into like a high yield savings if that's what you were doing, or into investing, or life insurance. You could have set that up throughout the year so that you have your money when you actually need it and it's actually performing for you, because you're just allowing it to perform for the IRS and they're getting interest off of it, and you're waiting to get it. And say you get a $1,500 refund, like, truthfully, that money is going to be gone very quickly. It's very few people who actually save their refunds. So you are not helping yourself by getting a refund. You can literally set up your deductions where you get your money year round, and the IRS has a calculator to help you determine what that should look like
Hmm.
so that you can use that money to
Put it to
actually
work.
build wealth.
Yeah.
Yes.
Yeah. I like that. That's really good. Really good. All right. How can a side hustle or small business on the side change a W 2 earner's tax picture?
Ooh, so what happens is I actually just talked to someone about this yesterday. So what happens is you have your job and you're getting your W-2 and they are withholding taxes. But when you're making money from a side hustle or just a business, then that is more income and it may kick you up into the next tax bracket. And so one thing that you should do is, well, first understand that no one knows, even if it's another job, like a part-time job, they do not speak to each other. All they know is how much money you made here and how much they should withhold in taxes based off the W-4 you filled out. So you have to take the initiative to, I mentioned that calculator, to go online, see how that income that you're possibly going to make, and you can just do rough estimates. Like, maybe if it's just a part-time job, you know you're going to work 20 hours a week, I'm going to make this much. You can guesstimate, as I like to say, how much money extra you're going to make, and then you can set that up in that calculator. It's going to tell you, like, this is where you're going to fall tax wise. Like, either you're going to owe more, or depending on your situation, because you get to exactly put in, like, okay, this is my filing status, do I have any kids, and all of that information. This is where you're going to fall and you may receive a refund, but most of the time you're going to owe. That's just what I see. So if you do have a side hustle, or even you have a side business, make sure you're keeping track of everything, because a lot of times, especially right now, I know a lot of people are doing a lot of these side hustles that are like freelance, like,
Mhm.
DoorDash or Uber Eats. Keep track of your expenses, because you are able to write off stuff even if you're not sure. Like, you can easily speak to the person who does your taxes. They should be able to tell you things you can write off, even if you're at the beginning, you're just trying to figure it out. You can go to Chat GPT. This is something I tested. Chat will tell you things that you can write off, because I know some people are questionable about AI, but I have tested to see what it says, and it will tell you things that you can write off, especially depending on the type of side hustle you have or business that you have, so that you can start keeping track of it, so that that'll help reduce actually some of the increase in taxes from the income. But I'm gonna say this because I just had this conversation with a younger person in my life. Do not let paying a little bit more taxes keep you from making more money, because you're
Yeah.
not paying 100% of what you're earning. You're not even paying half.
Right.
So please do not let that keep you from
Yeah. That's
getting a
that's the
side
wrong mind
hustle or
state. I don't want to.
yes,
I don't want to pay taxes, so I'm not gonna level up and
yeah,
make more money. That's a good problem to have.
exactly.
Yeah.
Exactly.
That's good stuff. All right. Let's see. Are there any advantages to converting from a W 2 to 1099 or LLC on the side?
Yeah, there's definitely, because you get to write off more expenses, but I would say do not do it just for the taxes. Because some people are not, depending on like your life, or what experiences you have, like you may not be ready for that change over from a W-2 to a 1099, because you do have to file like quarterly taxes. If you are not, especially if you don't have any strategy, I'm just going to say, like, go ahead and file quarterly taxes, because at the end of the year you're not going to be happy with the amount you're going to owe just be on that 1099, because most 1099s do not have taxes withheld. um, so make sure you're tracking your expenses. Again, that's going back to seeing what you need to do, as far as what can be deducted. But then also, make sure it makes sense for you. When I hear that question, I always go to, for some reason, I go to the dental field on that one. And so, because I know right now in the dental field, they're going to kind of like corporate side more. And so there are people who have 1099s and there's people who have W-2s. So just make sure that you know exactly what you need to do. But you do get to write off different things. Now, do not write off everything because you need income. don't don't spend everything because you're like, oh, it's a write-off, because it's not dollar for dollar at all. So the point is to have money left over when it's all said and done.
Excellent. All right. Last question for you. For W-2 income earners, what's one tax saving mindset or principle that every W-2 worker should start applying right now?
I think that one tax saving mindset that they should start applying right now is making sure that you are getting your money throughout the year and then applying it to wealth building vehicles. Do please, please.
I
And you could
second
do
that.
that automatically. You could set it up for automatic. So please do
Yeah,
that.
that's definitely for W-2 income earners. That is the
Yes.
key takeaway here tonight. If you didn't get anything else, instead of taking that tax deduction in a lump sum and letting the IRS benefit from holding your money, take that money, get it paid out throughout the year, take that money and leverage it, put it to work, whether it's in a wealth reserve contract, whether you're going to put it in your business, whether you're going to pay off debt with it. Don't let it just sit there and then take it at the end. Most of the time what you end up doing then is blowing it on frivolous stuff because you see it as an extra bonus that you get to spend versus as a tool that you could leverage. So I think that's really good for W-2 income earners. And so, Elena, thank you so much.
You're welcome. Thanks for
Thank you so
having
much.
me.
Yeah, no, it's a pleasure. Thanks you for your time and for just sharing. Folks, if you guys want to get in touch with Elena for a free consultation, just send me a message and I'll make a warm introduction for you. Elena and I work together to kind of, I kind of filter before I send people to her because she's very busy and she's selective. So we want to make sure that I'm connecting you with her and you're the right fit. And so just go ahead and schedule a free call, and I'll get you connected and set up with a consult with Elena. Before we wrap up, if anyone's on the live right now that has any questions about taxes strategies, I'll give you a 30 seconds to do that. But besides that, again, Elena, thank you so much. Next time you come, hopefully, I'll get some questions from the audience beyond my own questions that we can talk about. And you know what? Uh, just to make sure I don't leave it off the table. What were there any changes to the big beautiful bill, or is it what it was?
No changes since July 4th
None.
whatsoever.
Okay.
Just more clarity has been coming from the IRS. So I've been trying to tell people, because everybody's excited about this no tax on overtime and tips, but just know that no tax, it's not going to happen in your paycheck. You have to claim it when you file your taxes at the end of the year.
Oh,
So just
okay.
know that they're going to withhold those taxes and then you have to claim it back. And there's income limitations. So keep that in mind also.
All right. Thank you so much. I'll be back with you in just a sec. Let me just say goodbye to everybody.
All
And
right.
all right, everyone. Thank you so much for joining us tonight. And if you're watching this on the replay, again in the description below there'll be a link to schedule a free consultation. I can make an introduction for you to Elena, or if you want to talk about any of the pillars of the legacy generation system, make sure you go to legacygenerationsystem.com to take advantage of the free masterclass. Thank you for watching. Again, like, subscribe, and share. Let someone know who will let someone know about this content and the Kingdom Finance Team and the Legacy Generation System. God bless you. Take great care.